All right, my favorite chart patterns to trade. One, flag patterns. Two, opening range breaks. But there's context to it. I don't just take every single flag pattern, and I don't just take every single opening range break. I used to do that in the beginning, and I think that's one of the major reasons why I couldn't find consistency. There are four factors that I really try to play in or consider before taking those trades. I want to make sure that the daily is strong. I don't want to try to mess around with weak stocks, try to catch a bottom. I'm the type of trader where I like to buy high and sell higher. Two, I want there to be a momentum factor. I want the name to be hot. I want it to be really strong, and I want it to be known to have kind of a prior history of catching momentum and can really get going. So there's confidence and follow through of the patterns. And I have Tesla up as a great example, and I will go over some examples of setups on this name in a minute. I also like a big ATR, the average true range. I don't want the stock to have small moves. And then also, I want it to be around a key technical level. So this is what I think changed my trading a lot, and specifically, breaks of consolidation and, just breakout trades. And I try to focus more on the long side when doing this than I do the short, especially with the market we're in. So those are the four factors before I consider taking those types of chart patterns. And I did not used to factor this in as much before. And I think that led to a lot of inconsistency, because if you just go take any flag or any opening range break, I think you're going to find that you have some issues too with consistency. And this is where the issue of just waking up, looking at the biggest gainers and the biggest losers, and then trading those every day just didn't work for me. It works for some, great if those people can figure it out, but I feel like that kind of thing fails for most. So now that we got that out of the way, let's just go into some examples. Tesla is a great one, strongest stock in the market. And when you apply those patterns around key technical levels, it usually has a ton of follow through. So just to go over the first example, kind of get a lot of this out of the way and look right around here. So Tesla here announced a 5-for-1 stock split, which started a crazy move in momentum. And regardless if people believe that that is the right or wrong thing, who cares? I trade price action. So what was a key technical level? Just as far as the daily, this 1689. This was a prior pivot high. I'm a big fan of prior pivot highs or all-time highs, and use those as areas to consider finding a trade and then tying in the pattern that I like, which is the flags or the opening range breaks. So 1689 was the level, and this was the day in which it broke that level. Now here's the thing. Sometimes these levels are going to break and they don't form the pattern that I'm looking for right off the open. So what I try to do is I'm looking for those patterns just under that level or over that level, because once that key technical level broke, I feel like there's a lot of people watching. There's a lot of possible buyers that are willing to come into this stock. So I think that those patterns are more likely to follow through if it's right around that level. So 1689, Tesla off the open just went straight up. There's no pattern here. It just goes straight up. So it's really hard to obviously not have FOMO and not want to chase. So now it's just about waiting for an area or that pattern that I look for to possibly give this a shot. So here's an area where I see a possible first trade. It goes straight up. You got to just kind of let it do its thing. It's hard to not want to chase. I have the same feelings that everybody else has, but really waiting for the pattern to play out is what allows for higher probability trades. And I still make mistakes where I chase and do everything that everyone else does. But once you do it long enough, you just do that less. And then that's what allows you to become consistently profitable and make less mistakes. So right here, Tesla had a really strong push. Clearly, buyers are in control above that technical level on the daily, 1689. And then knowing that all-time highs is above and eventually it could get there. Who knew it was going to get there that fast? But right here, here's the first little flag. Pushes, pulls back to the 9 exponential moving average. I really like when price gets tight on the 9, because that can be where the price action continues. So pulls back, has a bit of a flag, and then right around 1724, 25, trying to anticipate the break of the new high of day is how I try to go about it. I'm not always perfect, but just trying to anticipate that break a little bit. So if it doesn't go, you don't get completely run over. Has a little bit of consolidation, and then that next candle. So being able to get in, try to get in right around 1724, 1725. I usually have a risk off of, below prior pivot lows. And I'll give it a few minutes just to try to see how it pans out. And then look at this thing go. Tesla has insane follow through. So obviously this is a monster. And the size of the moves on this are going to be different than most stocks, but has a lot of follow through. Goes 1725, straight up 1753. So that is a huge move. And I'm a scalper, so I take the quick moves. That's a big move. That's all you need to be able to put together a really solid day. And then just going through what this does after the fact, because once stocks clear major technical levels, they can be in play all day. Now, I don't like to just continuously chase names up all day. I try to be involved in the name within the first hour or 2 hours, because as it just continuously gets higher, I don't want to build that habit of let's keep chasing the flag patterns higher, higher, higher. It's something that I don't do. But look at what this does. It has a really strong push. So there's the first flag follow through. Buyers still clearly in control. Now it has to digest and relax because there's a big move. And then right here. So that morning high where it set a high of about 1750, 1755, nice period of consolidation, still holding right around the 9 and the 20 moving averages above VWAP, some of the indicators that I like to use. And then right there. So there's the high of 1755. And it just gets tight. It gets tight. It gets tight. Just watching the price action. I watch level 2 and time and sales. So factoring all that in. And then as this 1 minute candle starts to take off, that's when the level 2 and the time and sales would start to speed up. So I'm watching the speed of the tape to confirm that people are still willing to buy this stock at higher prices. And when it starts to speed up, trying to get in and anticipate that high a day. And this is a flag, but a little bit more of a long form flag, right? There's more consolidation. It's not so quick as this one over here. More kind of a flat top break flag pattern. As it gets to 1754, trying to anticipate the high a day break. And what's it do? That's a huge 1 minute candle showing that buyers are clearly in control and want to continuously pay for higher prices on Tesla. And it just broke a big key technical level, 1689. Get long. And what's it do? Very, very big move. So from 55 all the way up to 70, even higher, almost up to 1780, straight up. Remember, I'm a scalper, so I am not going to be holding for the entire move, but getting a chunk of it is all you need to put together a nice day, which is what I do, or I try to do on a daily basis. And there were two very nice setups on that day on Tesla. And then as you can see, the higher it goes, like, yes, this is a little bit of a flag pattern. It does go a little bit. But as it gets higher, this is what you have to deal with sometimes. Yanks after the flag happens. So I try to avoid those quick flags at really, really high prices once a big move has already been put in. And that's pretty much it. And then those were the setups of the morning that I thought made sense. And then now to go to this day right here. So Tesla had a huge push on the 5-for-1 stock split, went a little bit farther, a little bit faster than I think everybody thought. And then it had 2 days of consolidation finally, because that had a huge move. It has to eventually calm down, and then put in a little bit of a flag pattern. So this is what it looked like. And the new all-time high was 1923.90. And I actually posted this on my Twitter. I was like, above 1923.90, I think Tesla could go to 2000 pretty quick, just because of the momentum factor with this name. The momentum factor with this name is insane. And when it breaks those key technical levels, right now, it has insane follow through. So just going to that day and what it looked like right here. So those are some flag patterns I was talking about. This is more of an opening range break and then a flag pattern after the fact. So what did Tesla do on the day when it broke this 1929 and put in this huge candle almost straight up to 2000? Had a big push off the open. And then what does it do after? It just consolidates. And consolidation is key for big moves after the fact, especially when it gets tight, because Tesla usually has big moves. So when it consolidates over a period of, a long period of time, and then it has that break, especially with where it is on the daily chart, You factor all that together, you can get big moves. So here is an opening range break. The reason why this is an opening range break is because it has a long period of consolidation and then finally breaks the high. So the high was 1898.60. Look how tight this range is for Tesla. Just kind of hanging in a 5-point range. And then when it does the opening range break, knowing that there are key technical levels above. I really like when there are key technical levels above. So if I can get in at a decent price, I know that if it starts to get close to those levels, algorithms and people will see the same thing that I see and be piling in and then create that big momentum move that I'm trying to take advantage of and just trying to get in at a good spot. So that way you don't get caught chasing and then have to deal with a huge pullback. So right here, look at this opening range break. 1898, right around there. Trying to anticipate the break of that, knowing that there is a technical level, there is an all-time high above, 1923.90. Get in long, and then look at this thing go. Look at this is insane. The speed at which it goes from 1900 to that 1923.90 level, that's a huge, huge move. But I missed the entire move up. But what I did is I took this flag break. So notice, here is the pattern that I like. So it did an opening range break after the first few hours of just slow consolidation, knowing that there was a massive technical level above. And then once it broke that technical level, so trying to apply these patterns around these major technical levels. 1923.90 was a new all-time high. Typically when Tesla is making new all-time highs, it has a lot of follow through. So what did I do? I didn't want to chase this. I had FOMO, but I just waited. It had the first pullback right at this level. I ended up taking the flag break right here. I got it around 1932, trying to anticipate the new high, and it was a quick rip. This already had a big move from 1900, so I took this. I got about a 10-point move in like under a minute, and that was it. That was the trade for me. It was all in, all out, and happy with it. And of course, what did Tesla do? It kept going and even created another flag pattern. But here was an example of where just because it's a flag pattern, as the price it continuously gets higher, I try not to chase, because if I was really good, I should have been in at a pretty low price. And I thought that the best entry on this day was right around that 1900 range when it did the opening range break, knowing that new all-time high was above. The reason why I didn't hold any up here is just because I think I didn't know how far Tesla could go, and I didn't give it the credit it deserved. That, hey, 2000 is above. There's a chance that we could get to 2000. I just figured from the perspective of the intraday chart, this being my very first entry of the day seemed pretty high, so I wanted to take the quick scalp, and I was happy with the trade. What did it do after the fact? Hit 2000 this day, which was crazy, and now it's $2,000 stock. So the key takeaways are that there are patterns that I like to trade, but I don't trade them just because the pattern is forming on any stock. It's really, stock selection is key, and I really like to take advantage of those patterns when they're right around very key technical levels on the daily. So a lot going on in the video, and hopefully I was able to make it clear and show some good examples as to how to apply those patterns. But that's what really made the difference for me, and really focusing on those 4 factors. So a strong daily, it's got to have that momentum factor, having a prior history of it can go when it's in favor. ATR, it doesn't need to be a Tesla, because not every stock is a Tesla, but I want it to be able to move. I'm not going to be trading a Bank of America, a Wells Fargo, a Macy's. They just don't move them enough for me to really want to be a part of those trades. And then also key technical levels on the daily. And putting all that together is what allowed me to turn the corner and go from not really understanding what I was doing and not finding consistency to being able to be consistent. So it's very specific setups, very specific patterns around key technical levels on the daily on stocks that have caught momentum. This is just my way of going about it. It doesn't mean that this is going to work for everybody, but this is just what works for me. And that's what trading is all about. You have to figure out what works for you and then perfect that process so that way you can execute every single day. Those are my favorite chart patterns to trade. Let me know what yours are. I appreciate you watching. Until next time, later.